Hey harvesters, and welcome to the channel. My name is Matt. In today's video, I'm going to go over the trades I execute for June 11th. This is going to be one of my quicker videos as I am tight on time today. So I'm just going to move this video along, kind of hit the key highlights and then keep pushing forward. So anyone that's a new viewer to the channel, the whole point to this Robinhood and this YouTube channel in itself is income generation, not trying to wait 30 years for my retirement accounts to mature enough so I can start pulling money. That's not the case here. We're trying to make an income stream today so that we can either pay our bills and enhance our life now, or if we're disciplined and are patient enough to run these covered calls and cash secured puts safely, we then might be able to replace our W-2 income. So if that is something that interests you, don't hesitate to subscribe, leave some comments, ask some questions, and let's get this ball rolling. First thing I like to talk about on my account is my Robinhood value, and that's at $162,662.54. I do this more so as a sign of transparency that yes, I'm an investor and I'm going to be showing you all of my highs and also all of my lows. Let's head over to my Excel spreadsheet and then talk about what I did for June 11th. For June 11th, I made $211 of premium, and I made this by running 3 cash secured puts. I ran it all on QQQ. I chose a 533 strike price twice and then a 532. When the market opened today, it was trading at the 535.62. So I decided to choose a put value of about $2.50 away from at the money. I thought this may or may not hit today, and it actually did end up hitting. So therefore, now at the end of June 11th, I have 200 shares of QQQ that I can then run covered calls. And the plan for tomorrow is run 2 covered calls on the QQQ shares I own, and then maybe 2 cash secured puts with the available buying power I have. But yeah, guys, choosing a 533 strike price netted me about $79 of premium. And for the second covered call at that same strike price, same amount of money. And then for the 532 strike price, this one did not hit, expired worthless at the end of the trading day today. And I only netted $53. And as you guys can see, as you choose strike prices further away from the money, the premium is going to be a little bit lower. Awesome. And for tomorrow, because I am getting my QQQ shares assigned at the 533, I plan on choosing a strike price of 533 or higher. I'm a firm believer that you shouldn't really pick strike prices that are below your cost basis. If you are willing to take that risk, sometimes I do it, but I would say 80 to 90% of the times I'll just take worse premium and then wait for the market to recover in the direction I want it to go, versus potentially risking an assignment below my cost basis, realizing a loss, or then having to deal with rolling options and then having my capital tied up for a couple of days waiting for the expiration to execute. There's choices and trade-offs for both. Ideally, I just like to wait until things go my way. I don't like to force profit in the market. I take what the market is giving me, and I don't like to invest emotionally. I'm just patient when it comes to choosing premiums. And that's honestly the hardest part investing, is not letting your emotions get ahead of yourself. I made $211 off of the cash I had. So that's a pretty solid day if you were to ask me. It's not necessarily close to my average of like that $300 a day, but some days you have good days of premium. Some days you have bad days of premium. This one's a midday, $200. I can't complain. You do $200 over a week period, that's $1,000 extra over a month. That's $4,000 over a year. That's $48,000. So yeah, this may seem small, but you're not going to get a home run every single time. Be patient and then slowly stack your money over time. All right, with that being said, guys, let's take a look at the last 42 trading days and see how this project and this Robinhood account has been growing. This is my favorite part of this spreadsheet to talk about, is how the project is going. For June 11th, like we mentioned, I made $211 of premium, and the account value is at $162,631.33. A little bit of a decline because when I did get my QQQ shares assigned, it has gone a little bit backwards, or I guess regressing a little bit. However, I'm not necessarily too concerned about it. I think QQQ in the long term is going to make money, and not worried about it. It'll go up. But over the last 42 trading days, my account has increased in value over 11.15%. I will throw a caveat, is back on May 21st, I threw in $60,000 in the account, and then that kind of diluted some of the gains over time. So I've only really been trading with an account value of $150,000 or more for about 3 or 4 weeks now. So we are slowly making our way, and then having this type of account is finally starting to show with my premiums. Since I had this bigger sum of money, my premiums are consistently higher and higher each week. I'm talking about the trade win percentage. I'm winning 97.62% of my trading days. We had 41 winning days, 1 losing day, and the average premium I'm making is about $332.63. If we look at the average premium I'm making per week, I'm making about $1,552.29. Looking at it at a monthly scale, excuse me, looking at it at a monthly scale, we're making about $4,656.88. All right, in the yellow here, guys, I have estimates based off of the performance of my account. And over the last 42 trading days, compiling this data, I came up with this $80,000. And for this $80,719.20, I basically took the average weekly premium and multiplied it by 52 so that I can get an estimate of that number. I will say this, from April all the way till now, the market has pretty much hit a low and then recovering a lot. Therefore, these numbers might be skewed a little bit, but let's say this, let's take 20% off of this gain, and if we're still up 35% or even 25%, that's still a fantastic number to have. That'd still be about $40,000. Therefore, some people have definitely warned me a lot in the comment section, but it's like, end of the day, warnings are great, but you still have to perform in the market, and you can't be afraid to invest. Well, with that being said, the average yearly percentage with the data and the estimates is about 55%. And when I started this options trading back on April 11th, I came up with a nice goal of $29,740. That's when I had an account of $86,000. So that would probably be like, what, 30-40% of the value. And we are well on our way to blowing that out of the water over this next 29 weeks remaining in 2025. So I still have to make about $15,769 to meet that goal. But yeah, we're well on our way. We could probably hit that in like 2 more months. I came up with a little bit of estimates here to kind of to showcase what I'm trying to achieve here. Okay, from the remaining amount of weeks left, if I took this weekly premium, or this average weekly premium of $1,552 and multiplied it by 29, I would make $45,000 plus the $13,900 I made. And at the end of 2025, I would make about $58,987. That is without me trading the first 3 months of the year. That's just an estimate, just based off of what the data is. Ideally, what my realistic goal, like, yeah, I came up with this $29,740 goal back in April. However, I think now that the account is at like $150,000, $160,000, I think a very safe and achievable goal is about $1,000 a week. So if we do 29 weeks remaining in 2025, I'll make $29,000. And by the end of 2025, with this $29,000 plus the money we've already made, I'd be up $42,970. So not too bad if you were to ask me. I wanted to project a little bit into the futures for you guys to get a idea of what returns could potentially look like. By the end of 2025, if I just add this realistic $1,000 a week number, at the end of 2025, unless there's some crazy black swan event, World War III going on, I'm anticipating my account to be at about $207,000 by December 31st, 2025. And based off of the percentage I'm getting that we are estimating, I wanted to come up with potential returns. So 2025, like I said, we're going to end it with $207,000. For 2026, if this return stays exactly the same, like I said, very optimistic that it's going to change. And whenever the accurate numbers come in, this percentage is going to change. And then it's also going to change these estimates because this cell is tied to these numbers. But from the data that we currently have right now, I'm just going to give it to you. At the end of 2026, I'll have $322,433. And same concept moving forward. At the end of 2027, I'll have about $500,316. By the end of 2028, I'll have $776,336. 2029, I'll have $1.2 million. And by 2030, so about 5 years away, I'd have $1.8 million. I will say this. This hasn't been accounting for taxes, so I might throw in like a little tax calculator for how much taxes I'm probably going to have to pay based off of how much premium I'm making. Well, I'm going to put this in perspective. Having an account of $1.8 million, if I'm running these options exactly the same, when I get to that number, I'm probably going to run them a little bit more conservative and further away from the money. I'll make less premium, but then I'll be able to capture more of that upside. Having an account of 1.8 million is 11 times bigger than my $162,000 account. So if we were to come up with an estimate, if I took 11 times my daily premium of $332, I'd be making about $3,688 every single day running options. That would be freaking wild. And I think by the end of that year, that's about $900,000 of appreciation every single year, or premium. So that is crazy wild. That's something to look forward to. That is obviously 5 years away, and we don't know what the market's going to look like. We don't know what the market's going to look like tomorrow. So that is wishful thinking, but a man can dream. Moving on to our weekly tracker, we've had 9 weeks that have completed successfully. Of those 9 weeks, 8 were green weeks, and then 1 was a red week. The red week was more so a 1 red trading day on April 22nd. We don't have to go back into the details, but I definitely had to pay the learning toll of understanding rolling your options. I'll do a deep dive of this red day so that people don't make the same mistake I do. But sometimes, even if you watch the video, it doesn't hurt until you get bit. Either way, for the week we are currently in, we're already at $1,609, and we still have 2 more trading days. So we might be able to hit $2,000 by the end of this week. So hopefully that happens. For the monthly tracker for June, we are at $3,608. And for the yearly tracker, we're at $13,970. So now, with that being said, guys, let's head over to Robinhood. I'll talk about the covered calls I plan on running for QQQ. Then I might run 1 cash secured put on the SPY and then 1 cash secured put on QQQ. So let's look at those numbers. Okay, guys, now that we are back to Robinhood, let's head over to QQQ and take a look at the covered calls. Let's go to Trade QQQ Options. Even though this is a quick video, I'm going to continue to reiterate the point. I am never going to do a buy call. I don't like paying an investor upfront premium to run a specific option, and I don't like having my option lose money due to time decay, the theta, that's the Greek that deals with the time decay. To avoid that entire conversation and then potentially losing money, 90 to 95% of investors that run buy calls lose money, and if they tell you they are winning, that's probably a lie. All right, either way, now that we're at the QQQ sell call, to do that, you have to press the sell call button. I own 200 shares of QQQ now, so therefore, an investor is going to pay me an upfront premium to sell my specific shares at a strike price. If that strike price is hit at the end of the trading day, they're going to get assigned away from me, so which means I'm going to sell them. If they don't get assigned away from me, the contract expires worthless. I keep the upfront premium. Let's get this ball rocking and rolling. Currently, the QQQ is trading at the 531.56, as we can see with this little orange tab here. And the dollar cost average I bought these QQQs, or they were assigned for me from running the cash secured put, is the 533. So for tomorrow, I will not choose a strike price below this 533. But if the market is showing this 182, I might run 1 covered call at the money at this 533 strike price, making $184, and then another strike price I'll probably choose is this 535. There's the delta here for this 535 is a 30 or 0.3, which means there's a 30% chance of this option executing, and I'll make about $94 off of that option. We will see how the market plays out tomorrow. If there's a spike up, then I might choose some of my strike prices further away so I can capture some of the appreciation. But if the market's looking this kind of red in the morning, I will probably just lock in 1 covered call at this 533 and then 1 covered call at this 535. And then just by running those 2 covered calls, I'd make $278. Now let's talk about some of the cash secured puts. For the cash secured put against a QQQ, I plan on running. Let's click on that bad boy. Same story here. The QQQ is trading at the 531.48. Off the bat, whenever I run cash secured puts, I'll start looking at $5 away from at the money. So let's look at the 526. 526 is looking like a delta of 0.14, which means there's a 14 or 15% chance of this option executing. I might be able to risk it a little bit more. So I'll probably choose this, looking for maybe like a 0.2 delta. Yeah, maybe let's run this 528. Yep, let's run this 528. I usually like choosing something that's in the between 0.2 and 0.3. And yeah, that looks good there. So just running all of my plays for QQQ, I'd make about $352. When the market opens tomorrow, that's probably going to change. Now let's head over to SPY and talk about the cash secured put I plan on running on this SPY. Trade SPY options, sell put. I usually like running my covered calls and cash secured puts as a daily. Some people like weekly, some people like monthly, but I like running them daily because when the market fluctuates, I'm able to adjust my trading strategy based on the day versus coming up with a strategy and then hoping it plays out over the week period. SPY is trading at this $600. Let's look at $5 away at this $595. That is a delta of 0.13. That is a low chance of it hitting. So maybe I really don't want this SPY to get assigned. So I probably would just choose. Yeah, I'll probably will just choose this 595. Yeah, it's only like $40 a premium, but I don't want to find myself where I'm over margin, because if I were to get the QQQ cash secured put assign and the SPY, I definitely would have to have about $50,000 of margin available, which wouldn't necessarily be a problem. I would just then sell the now 100 shares I own at the money, rack in a big premium, and then hopefully by the end of the trading day, the option gets assigned away so that I can make that premium and then offload some of that margin cost. That's kind of the plan. I don't want to go too wild. Yeah, guys, that wraps up the video. Wanted to make a quick update. I was super busy today. Work was crazy. And also between throwing a workout in and finding time to make this video was kind of rough. But yeah, guys, let's stay locked in, stay disciplined, stay harvesting. Matt out, and I'll see you at the next video.